Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're actually going to be covering two topics because they are pretty much directly related, and I figured it would be easier to just teach them at the same time. So this is in Audit Area 3, this is Section H. The first topic is application, perform procedures to identify subsequent events that should be reflected in an entity's current period financial statements and disclosures. And the second topic is analysis, determine whether identified subsequent events are appropriately reflected in an entity's financial statements and disclosures. So essentially, we're covering subsequent events and just about everything that you need to know about subsequent events for the Audit CPA exam. And we're going to be doing that the Superfast CPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to superfastcpa.com and sign up for our free 1-hour webinar training. Again, it's free. It is 1 hour long, and we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years failing exams. And after you watch that, you're going to want to learn more. So make sure you also check out becoming a Superfast CPA Pro member. In today's video, we're only going to cover 5 questions, but Superfast CPA Pro members get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other videos, check out becoming a Superfast CPA Pro member. With all that, let's dive straight into the questions. All right, here we are at question 1. And again, we are covering 2 Blueprint topics at the same time today, but basically I'm just kind of mixing them together to teach you about subsequent events in general. So let's dive into this first question. The first thing that I always like to teach is you want to read the last sentence of the question first. It's not always helpful, but very frequently reading the last sentence of the question gives you context for what the question is actually trying to get at, what the real question and the real problem is that you're supposed to solve. So you read that to get context, and then you read the rest of the question with that context so that you know what you're looking for through the rest of the question. So let's do that here. Which of the following events would most likely be considered a subsequent event under auditing standards? So again, imagine you were on test day and you didn't know what you're about to see in this question, and you read that and you immediately know you're dealing with subsequent events. Now you can read through the rest of this and be thinking about it, which one of these would be considered a subsequent event. So let's go up to the top. An auditor is performing procedures to identify subsequent events for a client with a calendar year end of December 31st, year 1. While reviewing events that occurred after year end but before the audit report date, the auditor notes the following. January 5th, the client's largest customer filed for bankruptcy. January 12th, the company issued new convertible bonds to finance a product expansion. January 18th, a fire destroyed a warehouse. January 20th, the company declared dividends on common stock. So which of the following events would most likely be considered a subsequent event under auditing standards? So all we're trying to figure out here is which one of these is going to be a subsequent event. Is it option A, only the issuance of convertible bonds and the dividend declaration? Is it option B, all 4 of the events? Is it option C, only the customer bankruptcy, the fire, and the bond issuance? Or is it option D, only the customer bankruptcy and the fire? So out of all these, which one of these would be considered a subsequent event? If you have any idea, that's great. If not though, that's okay. We are using these questions to learn the material. So let's go ahead and dive into the explanation together. All right, here we are. The answer is B. All 4 events would be considered subsequent events. So let's kind of learn what a subsequent event really is. A subsequent event is any event or transaction that takes place after the balance sheet date, so in this case, December 31st of year 1, and before the auditor's report date, and that the auditor must consider for possible adjustment or disclosure. So it's any event that the auditor needs to consider that happened after the balance sheet date, but before the auditor's report date. Each listed item, the customer bankruptcy on January 5th, the bond issuance on January 12th, the warehouse fire on January 18th, and the dividend declaration on January 20th occurs in that window. Because they all fall within the period the auditor reviews for subsequent events, every one of them qualifies as a subsequent event, making B the correct answer. And so all 4 events is the correct answer. So again, all we're learning in this question is what is a subsequent event? And we just learned it there. It's something that happened after the balance sheet date, but before the report date, the auditor's report date, that the auditor needs to consider to see if it's going to affect the financial statements or need disclosure or things like that. So with that, we learned a little bit about what a subsequent event is. Now let's go to the next question. Okay, here we are at question 2. Again, reading the last sentence first. Which of the following would not be considered a subsequent event for the December 31st year 4 financial statement? So we just learned what a subsequent event is. So hopefully we can figure out which one of these is not a subsequent event. Let's go through this. An auditor completed fieldwork on February 20th, year 5, and issued the audit report on February 25th, year 5, for the financial statements of Brookstone Co. for the year ended December 31st, year 4. The following events occurred. January 18th, year 5, the company settled a lawsuit related to a product sold in October of year 4. February 22nd, year 5, a fire destroyed inventory at one of the company's warehouses. March 1st, year 5, the company's CEO resigned due to health issues. And February 5th, year 5, the company's largest customer declared bankruptcy following financial trouble that began in November, year 4. So again, which of the following would not be considered a subsequent event for the December 31st, year 4 financial statements? Is the lawsuit not going to be? Is the fire? Is it the customer bankruptcy? Or is it the CEO's resignation? So based on what we just learned, pay attention to the dates. Go ahead and pause the video to think about this. And again, come back when you're ready. All right, here we are at the answer D, the CEO's resignation on March 1st. That would not be a subsequent event as far as the definition we just learned about. Subsequent events occur after the balance sheet date, but before the audit report date. The audit report was dated February 25th, so the resignation on March 1st occurred after the auditor's responsibility ended and is not considered a subsequent event. The other three events occurred during the subsequent event period and would require evaluation for possible adjustment or disclosure depending on the facts. And again, we haven't learned about that yet, like about what you do with a subsequent event once you know there's a subsequent event. We're going to talk about that in the next questions. But so far, we've learned what is a subsequent event and which one of these would not be. And again, in this situation, it was the CEO's resignation because it was after the auditor's report date. Now with that, let's go to the next question. All right, here we are at question 3. What should the auditor do with this information? Let's go up to the top. An auditor is performing procedures for the audit of BriarTech Inc.'s financial statements for the year end December 31st, year 4. On January 10th, year 5, the company's largest customer filed for bankruptcy. The auditor investigates and finds that the customer's financial condition had been steadily declining throughout the last quarter of year 4, with missed payments and a poor credit rating documented in November. What should the auditor do with this information? So again, basically we can assume this is a subsequent event because that's what we've been learning about, but how are they going to treat this type of subsequent event? Let's go through this. Option A, disclose the bankruptcy in a footnote, but do not adjust the year 4 financial statements. B, take no action as the event occurred after the balance sheet date. Option C, adjust the year 4 financial statements to reflect the loss. Or option D, extend the audit report date to include the bankruptcy. So what is the auditor going to do? What kind of subsequent event is this? Let's go ahead and learn about that in the explanation right now. All right, here we are. The answer is C, adjust the year 4 financial statements to reflect the loss. So that's what they are going to do with this information. So let's learn a bit more about the types of subsequent events. We've learned what they are and how you know if something is a subsequent event, but depending on certain things, it will be treated differently. So let's go through this. This is a recognized subsequent event because the underlying conditions, specifically the customer's financial deterioration, existed as of the balance sheet date, so December 31st, year 4. The bankruptcy filing on January 10th confirms a loss that was probable and estimable based on conditions that were present at year end. Auditing standards require adjustment of the financial statements when a subsequent event provides additional evidence about conditions that existed at the balance sheet date. The loss on accounts receivable should be recorded in year 4 to avoid overstating assets. So I just kind of want to make sure it's clear what we're learning here. So if there is a subsequent event that provides additional information about conditions that existed as of the balance sheet date, so before the balance sheet date, or again, before the end of the year, so before December 31st in this case, if they get more information about something that existed before the end of the year, that kind of gives them more information about what should have happened and it might affect them adjusting the financial statements, then that would mean that they would have that adjustment in the financial statements. So that's the kind of subsequent event that is considered a recognized subsequent event. If the subsequent event is something that needs to be updated or changed in the financial statements, or again, be recognized in the financial statements. So that's one type of subsequent event. Options A and B are incorrect because disclosure alone is not sufficient for recognized events. Option D misunderstands the auditor's responsibility. The audit report date doesn't need to be extended just because a recognized event is found within the normal subsequent event period. And we talked a little bit about auditors extending their dates in the previous video, but in this video, we're mainly focusing on, subsequent events and deciding if it is a disclosed subsequent event or if it's a recognized subsequent event. And we just barely learned about a subsequent event that is recognized. Recognized subsequent events are events that the auditor learns about something that existed as of the balance sheet date, and so they need to adjust or change something about the financial statements because they got new information. So it happened after the balance sheet date that they learned the information, but the information pertains to things that happened before the balance sheet date. I hope that makes sense. That's a recognized subsequent event. Now let's go to the next question. All right, here we are at question 4. What is the appropriate treatment for this event? Let's go up to the top. During the audit of Stonebrook Furniture Co.'s financial statements for the year ended December 31st, year 9, the auditor learned that on January 25th, year 10, a fire destroyed one of the company's warehouses, resulting in a total loss of inventory stored there. The financial statements were set to be finalized and the audit report issued on February 5th, year 10. The warehouse and inventory were intact as of December 31st, year 9, and the company had insurance coverage for the property. What is the appropriate treatment for this event? So we just barely learned about a recognized subsequent event. Is this going to be any different? Let's go through these options. Option A, adjust the year 9 financial statements to write off the destroyed inventory. Option B, take no action since the fire occurred after year end. Option C, disclose the fire in a footnote for the year 9 financial statements. Or option D, delay issuing the audit report until the amount of insurance recovery is finalized. So what are they going to do in this kind of a situation? Pause the video and think about this if you want to, if you kind of have an idea about this based on everything we've learned so far. But if not, that's okay. We're going to look at the answer together right now. All right, here we are at the answer C, disclose the fire in a footnote to the year 9 financial statements. So this is a little bit different than what we just learned about. This is not a recognized subsequent event. This is a non-recognized subsequent event because it relates to a condition that did not exist as of the balance sheet date. The fire occurred after year end and was not the result of pre-existing conditions. However, because the event is material and could affect users' understandings of the company's financial position, disclosure is required to avoid misleading financial statement users. So again, this is not something that existed in year 9, so it's not going to be something that is recognized in year 9 because it didn't exist at that point. But it is something that is a huge deal and happened before the auditor issued their report, but after the balance sheet date. And people need to know about this because it's definitely going to affect what they think of the company and what they do with the company, with their stocks and things like that in the company. It's going to affect that because a fire with a warehouse where they lose a ton of stuff, that could potentially affect the company really severely, and people need to know that. So this is a disclosed subsequent event, not a recognized subsequent event. No adjustment is made to the financial statements since the assets existed at year end and were not impaired at the time. So as of year 9, they were not ruined or in a fire. Option A is incorrect because adjusting for a post-year end loss would misstate year 9's financials. Option B ignores the need for disclosure. And option D is unnecessary unless the financial statements themselves are misstated, which they are not. So we learned about another type of subsequent event. This is a non-recognized subsequent event, or I believe it's a type 2 subsequent event, where again, you just disclose it because it's a big deal, but you don't have to adjust anything because it did not exist as of the year end. Now with that, we learned a little bit more there. Let's go to the next question. All right, here we are at question 5. Which of the following is a subsequent event that should be disclosed but not adjusted for in the December 31st year 8 financial statements? Okay, so this seems to be kind of a mix of what we learned so far. Let's go up to the top. An auditor is reviewing several events that occurred after the balance sheet date of December 31st year 8 for Prairie Hill Corp. The audit report is scheduled to be dated February 20th, year 9. The auditor must determine which of the following events should be disclosed in the financial statements but not recognized. So basically, we need to figure out which one of these is a subsequent event, and if it is a subsequent event, will it be disclosed or recognized? We need to figure out if it's going to be disclosed. That's the one we're looking for. So let's go through the options. Option A, on January 4th, year 9, the company's largest customer declared bankruptcy after months of declining financial condition that was evident in year 8. Option B, on February 1st, year 9, a warehouse was destroyed by an electrical fire. The warehouse and its contents were fully intact and operational at year end. Option C, on January 15th, year 9, the company's board approved stock dividends to be distributed in March. Or option D, on February 10th, year 9, a court issued a final judgment related to a lawsuit filed in November, year 8, determining that a $1.2 million liability should be accrued. Okay, so again, which ones of these are subsequent events? And out of the subsequent events, which one of them is going to be disclosed rather than recognized? So think about this, think about everything we've learned so far, pause the video and come back when you're ready. All right, here we are. The answer is B. On February 1st, year 9, a warehouse was destroyed by an electrical fire. The warehouse and its contents were fully intact and operational at year end. So that would be the one that would be a non-recognized subsequent event. The other ones would be recognized or just wouldn't even be subsequent events. So let's go through this. This is a non-recognized subsequent event. It occurred after year end and was not the result of a condition that existed as of December 31st. However, because the loss is material and may affect users understanding the company's financial position, disclosure is required. So they do have to disclose it, even though it is not a subsequent event that is going to be recognized in the prior year financials. Option A is a recognized subsequent event. Since the financial deterioration was present at year end, the resulting bankruptcy confirms a loss that should be adjusted in the financial statements. Again, this was happening during the previous year, and the bankruptcy, even though it occurred after the year end, it was leading up to it. Like this was something that was happening before the end of the year. Option C is not a subsequent event that requires disclosure or adjustment typically. It's a corporate action decided entirely after year end, and it doesn't reflect any prior condition. So, the stock dividends is something they decided completely after year end. It had nothing to do with the previous year as far as it affecting the financials of the previous year. And it's not usually material enough to be like a subsequent event disclosure. And then option D is also a recognized subsequent event. The lawsuit was filed before year end, and the judgment provides evidence that a liability existed as of December 31st and must be recorded. So we learned a lot about subsequent events and what a subsequent event is and what types of subsequent events there are. We learned a lot in these 5 questions. Before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2, 3, 4 questions trying to teach you about what a subsequent event is, or what a recognized subsequent event is, or things like that. Again, you just kind of see these things popping up all throughout the questions. And so you take a moment and you write out these important things, these pillar topics in your own words, so that you understand what you were supposed to be learning, what the most important things were that you were supposed to understand from doing these questions. And then as you do this each day, you will be building your own personal repository of the most important things you need to know for the exam in your own words. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just dive straight in. These are kind of just basic sentences. It could be like similar to a summary that you would have written out. Subsequent events occur after the balance sheet date, but before the audit report date. Auditors must perform procedures during this period to identify events that could affect the financial statements. Recognized subsequent events provide evidence of conditions that existed at the balance sheet date. These events require adjustment to the financial statements to avoid misstatement. Non-recognized subsequent events relate to conditions that arose after year end. These events should not be adjusted but must be disclosed if they are material to financial statement users. And then events that occur after the audit report date are not subsequent events. Auditors have no obligation to search for them unless the report is later reissued. So again, we learned a lot about subsequent events in this video, mainly about, what is a subsequent event and what a recognized and a non-recognized subsequent event is. We didn't dive super deep into what the auditor does to identify them because, again, the main thing I wanted to teach you about in this video was how to know what a subsequent event was and how to know if it was going to be recognized or non-recognized. Now with that, we learned a lot in this video, and that is it for the YouTube version of the video. Again, we only went over 5 questions and the pillar topics, but SuperfastCPA Pro members are going to get access to the full 10-question version of the video so that they can get a little bit more practice and a little bit more help. So if you like this and you like our other videos, make sure you check out becoming a SuperfastCPA Pro member. And the easiest way to learn about becoming a SuperfastCPA Pro member is actually by going to SuperfastCPA.com and signing up for our free 1-hour webinar training. Again, we will teach you the key ingredients to passing the CPA exam in that 1 hour, and after that, you'll have a much better path to learning about and becoming a SuperfastCPA Pro member. So check out the webinar, check out becoming a Pro member. With all that, I hope that you liked the video. Make sure to like it and leave a comment if you did, and I hope this was helpful. I will see you in the next video.